everyone. Yeah, so today before we go into the charts and look at the economic calendar, I'd like to talk about passive income. If you studied commerce, economics, or even it's basically commerce and economics, and maybe accounting, one of the leading things that you can do to get you into financial success is to get yourself into a kind of a program that will provide you with passive income. Yeah. Now here in Uganda, the best one of the best opportunities that are available, investing in bonds. These are government bonds. They can really provide you with a very good percentage on an annual basis that you can collect every now and then. There are so many ways that you can collect your money. You can look at maybe you can get it at a monthly basis or a weekly basis, or you can get it at the end of the year if you want. It depends on how you negotiate and who you talk to and what you really agree upon. But passive income is it's what leads everyone into financial success. Yeah, with passive income, you can plan for your money very, very well. First of all, with passive income, you won't be working. You won't be working for the money. It's not like a job. You get your big lump sum, you hand it over to a good financial manager, a good money manager, or you can hand it over to a bank or to the government, and you will start earning a certain profit from your money. Yeah? And then you can plan on those profits without risking your initial deposit that you had. So with this in mind, you can plan ahead very well, especially if you're going to do certain risky ventures like investing in Forex trading. Yeah, Forex trading is risky. I do it a lot, but I won't preach to you that it's something very safe, very what. The risk in Forex is basically in your appetite for more money. The more greedier, the more you become greedy, the more money you lose. If you're very patient and very stable, then the risk is very, very low. But we cannot be, I can't talk like someone who is ignorant, because I know that greed will always come in. It will always come in with that pride and that arrogance. You'll become greedy and you want to risk more in order to earn more. And that's what makes Forex trading very risky. Yeah? As a business, it's not risky at all, but the moment you start working, then you become the risk. Your appetite for more money. You become the whole. You're the risk factor in Forex. The person who is trading is the risk factor in Forex. But if you get your money and you give it to someone and they manage it very well, not in Forex, but then in all these other things that I've mentioned, bills and bonds and other investment plans that are there, which are very available, then you'll be able to make some money that you can then risk in these very volatile markets. So the baseline is to have a good money management system that is provided by outstanding organizations that will never lose your money, and you'll get, the profits will be very, very stable. With bills and bonds, you already have predetermined profits. In the stock markets, you also have predetermined profits, but they might vary based on so many factors that happen throughout the year. But with the government, you're assured that you're going to get your money at the end of the year or at the end of the month. Depending on when you want your money, you can sell your bonds and you can jump out at any time and do whatever you want with your money. But the important thing is to have that passive income, money that comes into your pocket when you're busy doing something else. It will be someone else's job to ensure that you get your money. So a lot of those opportunities will be coming up very soon. You will, it's very, very important to invest as a group, as a family, as a class. If you're in school, all the way from high school, when I was in primary, there are so many opportunities like that. These days, I don't really see much of them, but yeah, if you're in school, you can invest as a class, and by the time you finish your school, you'll have some money that you can invest into something else, or you can continue with a plan for as long as possible. Yeah? So passive income is, it's definitely your road to financial success. Yeah, so once you have that money coming in, you will be calm, you will plan very well, because you will already have a static factor that will bring in money at certain intervals. So having that alone will help you to plan for your money. If you plan today and you lose your money, if you trade Forex, or if you invest in crypto or anything else, and you lose your money, then you'll be getting another lump sum of your profit coming in after maybe 5 months or 6 months, and you'll have that whole period of time to think about how you lost your money before, yeah, in what you are trading, and you'll be able to overcome that the next time. And now within a period of maybe a few months or 1 year, you'll be able to properly invest your money and keep on making more. Yeah, so passive income is definitely your road to success, and very soon we shall be looking at so many ways that you can invest, so many places that you can put your money in with very good account managers and money managers, and you'll be earning some money every now and then you can fight these bulls and see how to get some money out of Forex. And every time you trade on Forex and you make even more money, yeah, it's always advisable to get that other money that you've made, especially from Forex or crypto, and you put it back into your slots of your passive income, and then your profits will even be more. Yeah, so if you start with $1,000, maybe as a group, if everyone has about maybe 1 million Uganda shillings, and you all put it in together, and then you get some profit. You trade. If you make another 1 million, you can go and top up from what you've invested the other side, and your profits, your returns will go up. So you will be in a position to plan for even bigger profits in the future. Yeah. So having said that, let's move on to the economic calendar. And today, just about 24 minutes ago, this event, the Harmonized Index of Consumer Prices, this one is from German, affecting the euro. Yeah, so this one, the previous figure was 5.5%, the consensus 5.5%, and the actual figure was actually 5.5%. Yeah, so that is that's the Harmonized Index of Consumer Prices. Now, this one here, it is really unchanged. Yeah, and the market impact, we're going to look at it in a few minutes on the charts there, and we see where the euro is versus the US dollar and many other currencies, and we see what impact this event actually had. It has just happened about 24 minutes ago. Yeah, so moving on from that, we have the affecting the Canadian dollar at 430. That is the net change in employment. That one is affecting the Canadian dollar. So the previous figure there is negative 200.1 thousand. Then the expected figure is 160,000. Then our employment change in Canada and America, especially in America, it's very, very important. And if you read the details of these events, you will realize that some things are more important in some countries than other events. You'll find that if employment rate is so important in Canada and America, you might not find it very important in Japan or New Zealand. They might have other factors that really determine the performance of their economies. Okay, so still at 430, there are so many events affecting the Canadian dollar. Okay, the first one is the average hourly earnings. There is no consensus there. The previous figure there is 2.4%. Yeah, there is no consensus there, so we could expect anything. There is the capacity utilization. This one is it's a very low impact event. Okay, The previous figure here is 81.4%, and the consensus is 82.2%. This one here is, it's normally reduced quarterly, but all these ones together, they will give you some good market impact at 4:30. Then the net change in employment, we've looked at that one. Then the participation rate. This one here is a medium impact event. Previous figure is 65%. The consensus or the expectation is 65.1%. This one here looks positive for the Canadian dollar just by that 0.1%. It's the only addition there. Then the unemployment rate. This one here, the figures already look good. Previous figure is 6.5%. The expectation is 6.2%. So these private companies and these non-government individuals expect the unemployment rate to go down. And if that happens, that will be very good for the Canadian dollar. Okay. Then at 6 p.m., there is the Michigan Consumer Sentiment Index affecting the US dollar. Previous figure there is 62.8, and the consensus is 61.3. So if this one here, if you get a higher figure than the consensus, then it will be very good for this for the US dollar. So charts like Euro USD will be shooting down. So the Michigan Consumer Index, the Michigan Consumer Sentiment Index is released by the University of Michigan. It's a survey of personal consumer confidence in economic activity. So here, if you have a high reading, it's positive. If you have a low reading, it's negative. And this one, this one here is actually expected to be low. So this one will be really bad. If it comes out lower than the consensus and lower than the previous figure, it will be bad for the US dollar. So charts like Euro USD will be moving up, GBP USD will be moving up. And the figures, the other events left there, they are all very, very small impact events. And we might have a market that is fairly not so volatile tonight. Okay, now this technical analysis app, it's showing us for the Euro USD, we saw that rise yesterday, especially after the news affecting the euro, Europe as a whole. The euro started rising up, and there is a lot of, it's still generally bearish, but we have a short-term rise. Same thing is happening with the GBP USD. We saw all those retracements starting to happen. It was a lot stronger, the buying was a lot stronger for the GBP USD, but it looks like this area is starting to take over. USD Japan is, it's still moving up in a very, very strong way. So let's just take a look at these three charts: GBP USD, Euro USD, and USD JPY. Okay, so this is Bitcoin. It's still at $39,000. So expectations of it moving to the 40s and 50,000. We're still waiting on that. Okay, so Euro USD, I think the important chart that we're looking at was the one with let me use this one as well. The one with the Elliott waves. There's a chart which is a lot clearer than this, trying to keep all the data for some kind of follow-up on a daily basis. Okay, so looking at this one here, we have a perfect bounce off this point of resistance. It was an earlier support level, and with this price moving upwards, it's a very strong resistance. So this was the earlier Elliott wave that we had, and so this one moved to the very bottom there, as we saw yesterday, and so we had this kind of downward movement there, and this wave being a bit sluggish. So we had this one here, a sluggish one, and a very long one down there, and Elliott wave number 4 is that one there. So Sonia is following the correct pattern, and yesterday we were looking for a bearish move, and it looks like it's starting to happen. Okay, let me get that exact chart so that so that we're in the right. This is it. So this is what we looked at yesterday, exactly what we looked at. Wave number 1, wave number 2, wave number 3, a lot longer than this one, a sluggish wave number 2, and an expectation of wave number 4 being very, very steep compared to wave number 2, and that's what we had. And so the analysis from yesterday was to sell to the midpoint of this wave number 4, and prices haven't really touched there, but they're fairly in that position there, and the pips from the top to that bottom are about about 100 pips inside there. And so we're now looking forward to continue selling at least to the bottom. So we have some kind of support at the midpoint of this Elliott wave, which was expected, and now we can continue selling if this point is broken. But according to the rules, wave number 5 must go below, and must go below this that low point. So the expectation is something like that, following this price movement. So we just have to wait. This is a 4-hour chart, and today we shall just have a few more candlesticks to the night. Then on Monday, we shall have our price movement down there. We might even have another jump. We've been having prices just skipping gaps and moving to some heavy positions that we didn't really expect, but that was all caused by the war. Okay, now speaking of the war, let's just take a quick look at this Brent crude oil. It's now at $113. It had moved below to about $108. So there is some kind of hope for these prices to actually maintain some kind of sanity. If these prices really move up, then we shall start losing our minds, because we shall be the ones to suffer from high oil prices. Okay, now let's look for the GBP USD. We see how those retracement levels are working. For the Euro USD, that retracement moved as high as that, and we could have those prices coming back. For the GBP USD, we saw another retracement yesterday, and so for the GBP USD, it's really strong. This 261.8, yesterday prices had actually moved so far from there. Let's get another chart that has some kind of. Okay, this one here is quite good, the 4-hour chart. So yesterday we had prices up here. Prices were up here in some kind of range market, and we have a clean break that has moved prices below to that point. And so all these areas have been broken. These Fibonacci retracement levels were, they were guiding us, to a very good extent. Yesterday they gave us some good guidelines, and now we had a price break. If you traded that break, maybe you opened your position at the close of the candlestick, and maybe got about 24 pips. Not so many pips there, but this is some very good price movement there. And let me look for another GBP USD chart that we're analyzing here. And okay, this one here is so far below. It is so far below its points of support. Okay, so this whole movement here was caused by that Brexit move, and we can start drawing our Fibonacci retracement levels from down there to the top, and we see we see what is actually happening right now. So okay, so for the GBP USD, prices have actually broken in the daily chart. Actually broken and tested this 38.2 level, and it could fall further to the 50.0 mark on the Fibonacci retracement levels, and we have a few number of pips, about 268 pips, about 260 pips. So that's a good number of pips, and we're at an oversold position with the RSI. So we could most likely be having a retracement there coming very soon, or we might have some kind of, as the strength starts building up, we might have a range market there. That is a very big possibility. So if that happens, then it will be good. We shall just look at this RSI. The moment it gets enough strength, moving in towards this overbought positions or to this medium position marked 50. Then we can sell when we get some good selling movement. If the situation in Ukraine and Russia continues the way it is, we might wake up to another gap in the market on Monday. If that happens, prices might be a lot lower than they are right now, and that's okay. We shall continue doing some analysis from there. Okay, now this chart, the euro versus the South African rand, it's been a long time since we looked at it, and the previous, we had these channels here. We had these higher highs and then these lower highs pointing to a sell. Then these higher bottoms and lower bottoms. These ones here normally point to a buy and actually bought. But then we had this kind of channel formation with these two trend lines forming some kind of bearish triangle, and yeah, we have a breakout. We have a breakout. One is a breakout in this RSI. You can see the price broke below it, and not the price, sorry, but the RSI broke below this trend line that has been measuring its bottoms, and it has somehow tested it. But then we have a clear break in this area here in the price. This is the 4-hour chart. And this chart, the euro versus the South African rand, this is one of the most profitable charts. This is about 3,357 pips. So to get a better calculation, I'm going to enter a trade with the 0.1 lot size so to get a proper calculation of these pips, of this euro versus the South African rand. So from the time it broke to where it is, the profit is fairly about $225. So that is $225 in that small price movement on the 4-hour chart. Yeah, but it's a very good amount of money considering the chart that we are trading. And yeah, the negative is also it also comes like that. So don't only look at the positive, that if I trade this chart, I'm going to make a lot of money. If you make a mistake, there will be a lot of money in the opposite direction, which will be very, very bad for you. Okay. Yeah. So let's take a look at this technical analysis app, and yeah, we get some other charts. The USD JPY. I think we've been looking at these same charts for quite some time, and I think we shall have a clean sheet on Monday so that we start looking for some new charts, some new types of analysis. But it's always good to keep on following up on what you previously analyzed, and yeah, it's very, very important. So for the USD JPY, we have the US dollar has really gained a lot of strength against the Japanese yen. And looking at these areas we had marked, I think this highest point was one we're looking at. If price was to break above this area of support, so above this area of resistance, then yeah, you could start buying and move a lot further than that. Trying to look for a point in price that is higher than what we have there. Okay, so in this 4-hour chart, we have price at the 116. Let me look at the daily chart. If it's 116, okay, the chart is still loading there. That's okay. So this USD JPY has actually broken some very strong resistance levels, especially this previous one. So we have a clean break there. You can see this candlestick closed below there, another one opened there and moved upwards, and yeah, we have some good price movement there. So we can start looking for the take profit points, even if the price continues moving a lot further than that. So we have this zero mark. Maybe we'll delete all these. We'll do some bullish analysis. This one here gave us some good guidelines on the areas of support. I know that price has moved upwards, then we need to get some guidelines on the areas of resistance. Now, looking at this sort of a reversal, if this was a trend, then it most likely reversed there. So we get from this highest point to this lowest point, which is okay. We have good areas of support and resistance, and we have that break. So we have the 161.8 mark, which could be the next point. If we have a lot of strength moving upwards, we can have a stop somewhere in between, a point of resistance that gives us some kind of okay, it will stop us in our tracks. If we're just buying and you expect too much profit, prices could easily be resisted there. But then if that point is broken, we can trade to that 161.8. That is about 50 pips away from this midpoint, and from where the price is right now, it's about 75 pips. Yeah, a lot further than that is a 261.8 Fibonacci mark. So here we have a very steep rise in this price, and yeah, for that kind of upward movement, we take the bottoms. So in this 4-hour chart, we have the low points are not really so many. It's very steep. So we have the price moving along that trend line, and to get some kind of some guidelines, some Fibonacci funds to guide us in that upward movement. Okay, so we have that. If just in case this is broken, just in case we have a break in that trend line, these are areas that will support the price moving upwards. Then funds supporting that other upward movement, they are quite, maybe we take these tops, we take these previous tops. Okay, there are two. Okay, we have these ones here for sure. So these tops here gave us this trend line was broken there and supported there, and then price picked up from there. Okay, so we can apply the funds as well, though they've already been broken. But the important thing is to know areas where you could have had a lot of resistance. So we have those areas there, and now we don't yet have any good tops to give us some good price movement up there. This is some kind of fundamental move. But looking at these funds, we can have so many other levels drawn there, the 38.2, the 50.0, the 61.8. We shall have more levels added to these. The fund can really go to about 180 degrees with a lot of support and resistance levels there. So I'll be doing some modifications for these funds. Instead of having only these 3 levels, we can have about 20 levels, which will help in determining prices, very far from the future where they are right now. So here, it's only the Fibonacci retracement level that we can actually consider and look forward to. Yeah, but this very steep market without any, I hope now the daily chart, okay, it has now loaded very well. So I'm trying to look for more, for some points which are a lot higher than that. And we don't really have any, but we have this trend. We have this trend in the daily chart coming from the very bottom. Yeah, you can see that trend line there. So this one here, it's a very, very long term. So we have the price starting to move from below there, and then it was supported along those lines. Then it broke and moved up. So here we can get some long-term levels to keep in mind. And I think I'll keep this chart open for some time until we see how they actually play out. Yeah, so we have that trend line there. Then we have these funds. So you can see the 38.2 has already done its work. In between there, we have the 23.6. It doesn't come with these funds in default, but you have the 23.6 always in the middle. A fair distance between the trend line and the 38.2. And so price is moving along those lines. It's moving along those lines, and this is a better, it's a better, okay, these lines here, they give you a better visual. It's a better visual for these funds that you can actually follow. So every time you're putting in your indicators and your trend lines, you have to get a very good visual. A good visual also means that you have a good mathematical pattern there that is respected by the prices. So for this USD JPY, I think we shall be following it up on this daily chart. So even in between all these lines, there are also medium points of support and resistance that you can add in your free time. Maybe you can just do that today. That can be the medium point. Let me give it another color, make it a little less thicker, and I can give it a color blue. So color blue, that's a medium point. Can put another medium point in between the 38.2 and the 50.0. So those points are normally respected by the price. Surprisingly, you'll be very surprised. So let me add another one in between the 38.2 and our 23.6. Now you can see how that one is seriously respected by the price. Then another one between the trend line and the 23.6. So that's what we have. So we have price, very good support there, good resistance there, another point of resistance there. So prices are really moving in between all these funds. So you can have as many as 50 lines moving from this first trend line and all the way in a 180-degree semicircle. You can have so many funds there, and if you've drawn the right trend line, then you'll have a lot of so many areas that are very significant where price will be supported and resisted. So looking at this point where price is right now, it's just breaking this. It is now breaking this this resistance, and it's above all these other high prices, and we could start buying. So the zones that you could continue buying. Okay, you have to make these lines a little bit longer, but that's okay. So these lines will actually provide you with more areas of support and resistance. And even if you put another line in between these two, you will find that it is just where this price has been resisted, and it will also give you some good headroom to know where this candlestick that is there could also be resisted sometime in the future. Yeah, so the funds, you can start practicing with them. If they are very confusing, by all means, you can leave them alone. Do not try to adopt strategies that don't really work for you. Okay, I'll work on that sometime. So, okay, let's look at all these other charts. We have the Australian dollar versus the US dollar. A lot of strong buying movement. Let's take a look at that chart. I think it's not one of the charts that we've been looking at on a daily basis. It's good to have a new chart, something good for the change. So there's a lot of bullish movement according to the app, but when you look at the chart, it's not very strong, which is okay. Yeah, so in this 1 hour chart, you can draw the Fibonacci levels. Always good to begin with those ones, and look at where you are in these patterns. So price was currently resisted at 61.8 and supported at the 38.2, and is currently above the 50.0. So if we have any further upward movement, then we could trade to that level. Then okay, so we just have to, that is for a bullish position. For a bearish position, we don't really have divergence taking place. We have these good high points. Maybe in a 30-minute chart, we could have some. Okay, in the 30-minute chart, we actually have divergence. Okay, let me zoom this out a little bit. So we have this, we have this upward movement, and we could probably be looking at a reversal. Now, looking at this median point between the 61.8 and the 100.0, that is where we can trade if price breaks above this previous high point. We could collect some pips to that median point. Could get about 24 pips. Then to the very top, could get about 56 pips, which is okay. And to start selling, the only reason why you could start selling at this point is evidence of a reversal taking place. This is divergence. We have the higher lows and the lower highs and the higher highs there. So we have these two high points moving apart. So this is the divergence we have, and normally the point to take your profit is it's there. So in order to buy, we wait for price to break up there. Okay, so I've deleted the Fibonacci retracement levels because for buying it's quite simple. For selling, it has to really be a reversal. So what we have here is what looks like a reversal, and in order to buy, you'll actually have to break this high point because we have divergence, and it gives you a clear opportunity to buy above the support, which is and you can buy up to that point there, then which is the median point of the Fibonacci. Then you can again put in another trade to that other top where this area of resistance is. Now, for the selling bit of it, normally with divergence, you sell to the lowest point in between the two highs, and that is your first take profit. So you could sell to that bottom there if it's really moving down. So selling is about 60 pips to that bottom, and the stop loss is automatically determined by the previous high point. So above there is your stop loss. Let me delete these lines. So rules for stop loss and take profit. This is the highest point in this divergence move. So you get about 10 pips. That's about 100 MT4 points. So you put your take profit safely 10 pips away from this high point, because you know, if we're having divergence, then prices are very likely will not go up there. That's why you put your stop loss. Your take profit is already determined by the price movement there, the lowest point, and that determines your risk and reward. So selling from this top, you'll find that you're losing about 22 pips and making about 71 pips, and that is your risk reward ratio already calculated for you. And yeah, so this is a 30-minute chart. It's not a very strong chart for these old methods of analysis, but we have another low point there where you can take your profit. All these low points, they really determine where you should actually stop. We have another one there, another low point. So those are points that you should look at where you shouldn't really just keep on trading below. Just, you know, all these areas here are points of caution. So the pips to those other low points, you know, to the take profit 1, right now they're about a 57, take profit 2, about 100, take profit 3, about 170. Then to the very bottom, which is extremely ambitious, so many pips down there, about 245, or 240 minimum. So yeah, so that is for the Australian dollar versus the US dollar, and that's the last chart for today. Yeah, so these old methods of analyzing price action, divergence, one thing you need to know is they were created a very long time ago, and that during those days they were only trading the daily charts on the stock market. And you know, the stock market opens at 9 a.m. and closes at 5. And on a daily basis, you can always record the opening price, the price at which the market opened. You record that. Then you record the highest price that the market moved during that day. Then you have your high point. Then you record the lowest point that it went. That will be your low point, and then the closing. So if the market closed below opening, then you have a bearish candlestick. If the market closed above the opening, then you have a bull, you have a bullish candlestick. And yeah, so that was how things were done those days. And if you have so many candlesticks, then you start looking for divergence and price action and all that, and then you do your analysis. But on a daily chart, now we're doing that on a 30-minute chart. So it's a bit of a risk. That is a stock market. This is a Forex market. This one is a lot more complex. So you should be very careful when you're applying price action, especially in 1-minute charts, 5-minute charts. Yeah, to be very safe, do it on a daily chart, and then go for the stock charts. There are so many that are there on the MT4 platforms, so you can trade those charts and apply those methods where they were meant to be applied, and where they were actually created. And there, you know, you won't suffer so much. But in the Forex charts, things are a lot different. I think you will see, you know, types of analysis coming up very, very soon, many years from now. Right now, we're just banking on what we know, because it's what we have. But as many people keep on trading and, you know, discovering many trends in these markets, we shall have some very standard Forex trading patterns that will actually work for the Forex market, and not just adapting what was in the stock market and bringing it here, and then talking so much for it, you know, giving it so much support. You know, no matter how much you talk about something here, if it doesn't make you money, then by all means you're going to lose a lot of money and you'll get very frustrated. So for the Forex market, get something that works, and do not doubt your analysis. Your analysis might be very, very good. It might be what we are all looking for. So if your analysis works, by all means, document it. And yeah, if someone else sees it and then they say, me, I only use divergence, it's a documented style, but you're just gambling around. Do not discard what you're using, because of what already exists. What you're using might be exactly what works for these charts, especially on these small time frames. So Do not discard any methods that you're using. I do not discard my methods. I do not discard my robots or anything, because in the future, yeah, these things, when you reach some years to come, then there will be a lot of acceptability in so many trading styles, and then you will really, really be disappointed in yourself for dropping everything that you were using that was actually working. So if you're making money with a certain strategy, do not drop it because of because of a strategy of someone else. If you're making money, by all means, continue making money. Don't try to change your style. You can improve it, but do not discard it if it's working. Just ride it out until it stops at some point. Yeah, so thank you for watching. Have a good weekend. Goodbye.